The tech industry is heating up right now, more than usual in fact. This is because the top tech stocks are reporting their latest earnings. If anything, the sheer scale of some of these companies speaks to the resilience of the sector amidst the pandemic. Today, we will do tech stock analysis: Apple, Amazon, Microsoft, Alphabet, and Facebook. Number 7. Alphabet stock will soar above $2,000 a share. Shares of Alphabet, NASDAQ, GOOG, NASDAQ, GOOGL, parent company of Google, ended 2020 basically flat. But analysts see big things for Alphabet in the year ahead. Bank of America, New York Stock Exchange, BAC, recently issued a report stating that it sees Alphabet stock rising 22% in the next 12 months to $2,150 a share. Bank of America also expects Alphabet to outperform all other FANG stocks, notably Amazon and Apple. BAC isn't alone in its forecast. Among 39 analysts offering 12-month price forecasts for GOOGL stock, the median price target is $2,000 a share, with a high estimate of $2,300 a share. The reasons for the optimism include a rebound in research advertising, as well as strong returns for Google's cloud business, which Bank of America foresees generating $24 billion in revenue by 2022. Additionally, Google just concluded its $2.1 billion acquisition of Fitbit, concluding a month-long investigation into the deal by the U.S. Justice Department. There had been concerns Google would use personal data from Fitbit's 120 million devices to support advertising directed at consumers. Number 6. Amazon will finally split its stock. Will they or won't they? That has been the question concerning a potential stock split by Amazon since last summer. After Tesla and Apple each split their stocks within days of one another last August, investors began demanding that Amazon also split its stock. The online retail juggernaut has one of the most expensive stock prices on the market today at $3,310 a share, and the company hasn't split its stock since 1999 at the height of the tech bubble. Retail investors are clamoring for Amazon to finally split its stock and make it more affordable for individuals to take a position. Amazon Supremo CEO Jeff Bezos has been coy about any current or future stock split, saying that Amazon stock is not the company. However, analysts and investors offer no shortage of reasons for the company to again split its stock. Astute observers note that Amazon would be unable to join the Dow at its current stock price, explaining that Amazon would account for roughly one-third of the Dow Jones total market weight at its current stock price, and theories on the form that a stock split could take a bound from a 5-for-1 split to a 10-for-1 split and even a 65-for-1 split. Amazon's ad business is likely to benefit from some of these same themes around e-commerce and an at-home shopping season. Number 5. Apple, NASDAQ, AAPL. Apple is one of the biggest smartphone manufacturers in the world. Weak iPhone sales in 2019 and pandemic-related headwinds in 2020 caused Apple's sales growth to slow. However, in the first quarter of fiscal 2021, reported late last month, Apple's growth re-accelerated substantially, driven by a wave of new products. Apple's performance in the latest quarter showed strength in all product categories. The recent release of the G5-enabled iPhone 12 family led to a 17% year-over-year jump in iPhone sales. Likewise, Apple's latest M1-powered MacBook models caused Mac sales to surge 21% year-over-year. And services revenue jumped 24% year-over-year, driven by strength in App Store sales, advertising, and cloud services. Investors should be heartened to see Apple's year-over-year sales growth top 20%, and even more excited to see the broad-based strength across all segments. Apple's products are still in high demand, and that's a good sign for the company's future. Number 4. Microsoft, NASDAQ, MSFT. 2020 was a challenging year, but it propelled a lot of growth for Microsoft as the pandemic forced a massive shift to remote work. The company's Team Chat app, for example, grew to 115 million daily active users in November from 44 million in March. Teams will sustain those levels of engagement in 2021, one analyst said, while other experts predicted additional areas of strong growth for the company as well. Microsoft was once considered a slow-growth tech stock. But over the past 5 years, its stock nearly quadrupled as CEO Satya Nadella's mobile-first, cloud-first strategy paid off. Investors might be tempted to take some profits after the multi-year rally, since Microsoft stock now looks historically expensive at 33 times forward earnings. Number 3. Facebook, NASDAQ, FB. Facebook owns 2 of the most engaging and largest social media apps in the world, its namesake, Facebook, and Instagram, as well as 2 of the biggest messaging apps, WhatsApp and Messenger. It makes money by displaying ads to users while they browse through feeds of photos and videos. Citi analysts said Facebook is likely to continue to be a primary beneficiary of the ongoing shift to digital ads, with shopping tools poised to benefit from the surge in e-commerce. Facebook, NASDAQ, FB is down 2.6% so far this year. Already in 2021, Facebook stock is meaningfully trailing its internet content peers. From where I sit, Facebook remains a smart buy. A total of 50 analysts cover Facebook stock. Of those, 39 rate it as a buy, 4 have an overweight rating on it, 5 have a hold rating on the share, and just 2 rate it as a sell. The analyst median price target on the share is $345 versus its price this afternoon of $265. With so much excitement surrounding the GameStops of the world at the moment, it would be easy to lose sight of the excellent investments for the long haul. If you're interested in owning a stock that will definitely be around a decade from now, Facebook is a smart buy early in 2021. Number 2. GAFAM's financial control over the digital ecosystem. Google, Amazon, Facebook, Apple, and Microsoft are some of the most influential global tech corporations. While they all have different market strength, they also compete for market share across hardware, PC, and mobile operating systems, entertainment, and more. E-commerce giant Amazon is the leading U.S.-based internet company by market capitalization and the most valuable brand worldwide. Considered a global benchmark for high-end hardware, entertainment, and media devices, Apple is also rapidly expanding its digital dominance beyond the limits of Silicon Valley. In 2019, Apple's revenue surpassed $260 billion, whereas Microsoft, Apple's primary competitor in the U.S. market, also reported its most successful year in company history in 2020. Google and Facebook remain global flagship names for internet search and social networks, thanks to ever-growing user counts and revenue via advertising. As 2 of the most visited web properties worldwide, these platforms continue to extend their financial success and their impact on the internet's infrastructure. The top 5 technology companies, Apple, AAPL, Amazon, AMZN, Alphabet, GOOGL, Microsoft, MSFT, and Facebook, FB, collectively now account for 22.4% of the S&P 500 index's market capitalization, significantly above the finance sector's current 13% weightage. Their substantial growth has been buoyed recently by high-profile purchases made by large and influential investors such as Berkshire Hathaway, BRK, Soros Fund Management, and Renaissance Technologies. Number 1. Are these the best tech stocks to watch right now? At today's opening bell, Google's parent company, Alphabet, saw its share surge past the $2,000 mark. This comes after the tech Goliath smashed Wall Street estimates in its fourth quarter fiscal posted yesterday. Another major tech players making waves now would be Amazon and Apple. Both companies reported record quarterly revenues above the $100 billion mark. With such impressive figures, it would not surprise me if investors continued looking towards the tech industry for greater returns. Looking at the bigger picture, the best tech stocks will likely continue to perform. With so many companies falling under the umbrella term of tech, the possibilities seem endless. Whether it is work-from-home solutions, entertainment, or even digital enterprise management, tech is present. Because of this, investors continue to look for the top tech stocks to buy in the stock market today. Do let us know in the comment what you think of these tech stocks. Please subscribe to the Stock Advisor. Thanks for watching.